So you probably want to know with the rise in interest rates, what is the best step for you to take at this time? Should you buy now? Should you wait? Well, today I'm going to have an amazing guest, a mortgage specialist, Louise Mason, who's going to dive into some of these questions for us and provide us with the real-time facts. So without further ado, let's get into it. So if you're new to the channel, my name's Adriel with the Greater YYC Group, and we literally help people every day, just like you, who are thinking about making a move to Calgary, make that transition smooth. So if you are new to the channel and you want to know everything there is to know about Calgary and the Calgary market, click the subscribe button, click the notification bell, and click the like button as well, because it helps people like you who are thinking about making a move get access to this video. All right, so we have the amazing Louise Mason here with us, everyone, and we're just gonna discuss about the mortgage rates and about what's going on in the market right now. But before we get into that, Louise, can you tell us a little bit about yourself for some of the viewers?
Thank you, Adriel, and I'm so happy to be on your YouTube and so happy that we're doing this. I think it's such a great topic right now because, it's changing all the time and there's so much to say about it and there's so much hype about it. So I'm really glad that we're having this discussion today.
Absolutely.
As for me, so I am a mortgage broker with Mortgage Pal. It's a virtual online national brokerage. And so I'm located in Calgary, but we do mortgages, all over the country and it's all virtual, which is really nice. I am a mom. I have two small kids. I have a 3-year-old whose name is Taylor, and I have a 6-year-old who is Finley. And so she's in grade 1 now, and the 3-year-old is in preschool. So it's super crazy, fun, chaotic, tiring.
I can only imagine. Yeah.
Yeah, and you've got your little one, so you get how it is. And yeah, so that's really fun. So when I'm not, doing mortgages during the week, I'm just having adventures with my kids and trying to have as much fun as possible with them. And yeah, and another sort of fun fact about me is I'm British. I'm from England, from London.
Oh, no way. I
Yeah,
actually didn't know that.
yeah, which is funny
That's
because
crazy. Yeah.
it's funny that you didn't know that. Yeah,
Yeah.
so my family immigrated to Canada when I was 9, and I'm actually still a British citizen. And so,
Wow.
and I lived there for a couple of years in my 20s before my mortgage days and before I became a mom. My former sort of career before I was doing mortgages was in nonprofit fundraising. So that's what I was doing over there. I was raising money for sort of an international development organization that does sort of humanitarian work in sub-Saharan Africa. So I did that for a couple of years.
That's amazing. That's amazing. So as you can see, guys, she has a heart for people and she definitely is great at what she does. And I'll put her information in the description below. So anyone, if you're looking for a pre-approval, if you're looking for a mortgage, please feel free to reach out to Louise. As we continue, we're anticipating that interest rates are going to increase again. A lot of people are saying that maybe it will go down next year. What are your thoughts? What are you seeing on your side of things?
Yeah, so I mean, you've got sort of fixed rates and variable rates, and we know that variable rates are based on the Bank of Canada's prime rate or the overnight rate, and the fixed rates are actually based on Canada's bond yields, which is really when there's hype and fear about the Bank of Canada increasing their overnight rate, which there obviously has been a lot of that this year, then that is actually what pushes the Canadian bond yields to go up and pushes the cost of fixed rates up. And so that's why you're kind of seeing both variable and fixed rates have gone up quite a bit this year. It's all sort of due to the quantitative tightening with the Bank of Canada, which started in April of 2022. And it's all sort of, more kind of an aggressive action to try to try to address inflation
Right.
and bring that inflation down. And so historically, what the Bank of Canada has seen is that when we increase rates, our mortgage rates, then that sort of curbs spending with Canadians and brings down inflation. So that's why you've seen so many increases in the variable rate this year so far. The current prime rate is 5.45, and that's after 4 or 5 increases since April. And it's just been really, really hard on Canadians because it's been, both prospective buyers and existing homeowners. Going forward, we basically, what the economists are saying is that they do see things leveling out where variable rates are right now. Of course, it's too inflated, but they have to have it, sort of leveled out for some time. They can't just increase it and then start to see things get better and then decrease it again. So because we're not seeing, the effects on the inflation that we had hoped to, with all of these increases, we're probably looking at early 2024 before we see variable rates go down. But the good news is they're probably not going to go up anymore.
Right.
If they do, it'll just be a small increase. But so we do see things leveling out, and it's just going to be a little bit of a more expensive year for 2023. And then things should start to level out after that.
So that's some good information, because I know for buyers, some buyers out there are thinking, you know what, I'm just gonna wait it out. Interest rates are too high. But I know especially for people who are renting, you're literally paying 100% of someone's mortgage, right? So what would you say to buyers out there who are on the fence? They have a down payment, but they're thinking they should wait for the interest rates to come down. Do you think they should proceed? Do you think they should wait? Or does it depend on basically their situation?
Yeah, that's such a good question. And it's something that people ask me about every day. They're timing the market. The buyers are waiting for the rates to go down. And on your end, the sellers are waiting for things to stabilize. And so it seems like everyone, no matter what their situation is waiting for the market to align with their goals and to do what they want it to do. But what we've learned from 2022 is those historical norms where we expect certain things to happen in the market at certain times of year have just been completely wacky and unpredictable, and nothing that we predicted would happen has actually gone that way. For example, and I'm sure you've been keeping an eye on the trends across Canada, being a realtor, but right now we're actually seeing prices in Calgary and Toronto go up a little bit. And, that's normal for this time of year in Calgary, but the fact that the cost of purchasing a home in Toronto is actually increasing right now is like a little bit mind-boggling, and just goes to show that like you don't really know what's going to happen in the future. Right. And so timing the market and waiting for the stars to align for you is not really always going to work out, because for example, we had a couple of buyers who were looking in the spring of this year when interest rates were lower, but prices were higher, and held off thinking that prices would go, the prices would go down, which they did, but then the interest rates went up. And so they actually, buying the same property today versus buying it in the spring, it wouldn't give the results that they would have thought at all, because with prices going down and interest rates going up, you're not really looking at that much difference in terms of your cash flow. And so, what we're really not discussing in this whole time the market conversation is the buyer, like their financial readiness to buy a home, in my opinion, is the most important thing. If your career is finally in a stable place, you've been there for a couple of years, you're in a healthy place in your career, your down payment is there, you've got your savings or investments to a point where you can put a healthy down payment down, that's when I would say, if you're ready to buy a home, that is the best time to buy, because you just don't know what's going to happen. And a lot could change in terms of your own assets. A lot of people have their down payment in an investment portfolio, and that could change. If there's anything that we learned from COVID, is that, life will surprise you and the only constant is change. And so I say, if, you are ready personally and your family is ready to not be renting anymore, and then you're ready. It's never a bad time to get into the market, is what I say. And like you said, you don't want to pay anyone's mortgage for any longer than you need to, because no matter when you buy, you're still getting into the market earlier than later, meaning you're, growing more equity, you're paying that principal balance down sooner. And, it's always just a good idea to have real estate. I mean, look at the wealth in our country. It's all real estate.
Yeah. And that brings me to my next question. So how would buyers prepare? How do they prepare for a pre-approval? I always encourage anyone, before they even start looking for homes and stuff, always get a pre-approval. How does someone prepare to get a pre-approval?
Yeah, that's a good question. And we like to use the analogy of a chair. So the chair has 4 legs, and you want all of your legs to be strong and stable so it can, bear the weight of someone sitting on it. And, if you had one leg that was shorter or one leg that was missing, all of a sudden, the chair would be really wobbly. So basically the 4 legs of your mortgage chair make up the 4 components that are going to determine a lender's decision to approve you or not. And this is sort of, the 4 areas that you want to focus on when you're thinking of buying. So one is your own equity or your down payment, which is really looking at your own assets. So what do you have in your savings account, investments? Do you have your 5% down? And, are you financially ready to, put 5% down or more if that's required? And so the second leg is your income. So do you have a stable job or a business that's bringing in stable income? And what does that look like in terms of regular monthly income? This can be an issue for a lot of clients who are moving to, people are always moving to different provinces in Canada. So, having to start a new job in a new province can affect you, because obviously they want to see proof that, you have that stable monthly income. And it can also be sort of a concern for self-employed buyers as well, because sometimes your income is inconsistent. And, there definitely are options for people moving provinces who are self-employed. Which is where a mortgage broker comes in, because you want to be able to kind of work together to find those solutions. But that's the second leg, is your income. And one more comment about income as well. That could be retirement income, that could be dividends from your portfolio, that could be, a disability pay from the government. There's various child tax benefit. That's considered income. And so when we say income, we don't just mean from a job, but what does your overall money coming into your family month to month look like? And then the third is your credit, of course. So for prime lending in Canada, you want to have a score of 680 or higher. Some prime lenders will take on clients who have as low as 650. And for the clients who have under 650, then we would have to look at alternative solutions, which we absolutely, have. We have B lenders who will take on clients with credit as low as, 500. Yeah. So, but, basically when they're looking at your credit, they are trying to understand how you handle credit. Do you pay your phone bill and your credit card on time every month? Just generally, how do you handle credit? Are you constantly maxing out credit cards? Because that sort of reflects poorly on your credit character. So they're actually pulling your credit report and taking a really in-depth look at all of your credit behavior for the past, so many years. So, so even that, one cell phone plan that you forgot to pay and it went to collections 4 years ago, that can kind of bite you when you go to, apply for a mortgage. And not to say that you won't be approved, but, those things are all considered.
Right.
And then the fourth leg of the chair is obviously the property that you choose. So Of course, people don't know this until later on down the road. It's sort of the last step, but the lender has to approve you and your property. People don't always consider that your property also has to be approved for the mortgage, not just you.
You're right, right.
So, they don't want to be investing in a dumpy old home that maybe if it's right by a river and could flood, or it used to be a grow up, or whatever the case is, lenders like to invest in good quality properties that are going to last.
That's great information, because I know I've got a few clients, they sometimes ask if I'm self-employed, what are the steps, or if they're moving from province to province, what do they need, right? So again, for those who are watching, there's some great information. And of course, you can always reach out to Louise as well for further clarification on anything. And before we close, I wanted to ask, we've heard the term marry the home, but date the rate. For those who may have heard that, would you be able to just share a little bit about what that means? Because typically when the interest rates increase, people kind of shy away from purchasing, right? And we hear if it's the home that you want, if you can afford the monthly payments, especially right now, there's a lot of room for negotiation just because interest rates have gone up, which we weren't able to negotiate on much back in May and April. But yeah, just dive a little bit into that. Marry the home, date the rate.
I like that. It's funny because I'm a mortgage broker and I've not actually heard that phrase, but I like it. Yeah, so I think it's an important discussion to have because people are just very fixated on rate, and they seem to think that that's the most important thing. And there's so many factors that go into determining, if you're ready for home ownership, or if it's going to be a good investment, or, if it's going to be, if your cash flow is going to be healthy and all that. And the rate is just one part of that. And if we're looking at rates, I think what we're doing in 2022 is we're comparing the rates we have today to what we had during COVID. And that's not really fair because that was, a global crisis. And those aren't, that's not the goal, is to have those kind of rates. The rates have never really been like that. If you look historically, rates have been all over the map. And, even the people in the 80s, they bought for 18% interest, and now they're sitting on, sitting mortgage free on these, $1.4 million homes that they paid, $60,000 for, and so it's all, relative with rates. I think you really want to have a more holistic sort of picture when it comes to home ownership. So think about your lifestyle. I know for me, I have young kids. And in Calgary, renting just simply isn't an option for us right now because the rental market right now is very volatile and unstable and very expensive. It's not cheap to rent a home right now for a family. There isn't a lot of inventory in Calgary, and I know this is kind of the case with different parts of Canada too. But home ownership, it still makes sense for a lot of people right now. It doesn't make any sense to justify yourself, talk yourself out of buying when all the other stars align. You're ready, your family's ready. It makes sense, and you're kind of talking yourself out of it because you're trying to wait or time the market. It doesn't really make sense holistically to look at things that way because home ownership offers so many benefits. And by the time, someone getting into the market today would be in, say, the second or third year of their first term, and rates are normal again, everything's gone down, lots of people are starting to buy. A couple of things are happening that drives prices up. So that's one thing. And also lender underwriting policy is tighter in a hot market. And so today, your application is more likely to be approved by a mortgage lender than it would be in the spring when everyone rushes to the market, because the lenders aren't getting as many applications right now. So in order to sort of increase, to meet their targets, they're loosening underwriting policy, meaning more applications are getting through than we would have seen, in 6 months ago when the market was a little bit hotter. And so I have clients that are getting approved today that would not have been approved, this time last year. So I don't think that's something that people really know about, that you're simply more likely to get a yes from a lender in a market like this. And there's so many benefits. I think, the rate is, we need to just cancel rate obsession culture and think of home ownership more holistically and make it more about you, because what we know about real estate is it ebbs and flows. It's constant. What goes up must go down. And, this ride is always there, up and down. And so, the best time to get into the market is when you're ready. And so many things could change by the time your rate gets to the place that you have an idea of where you want it to be at, that it's really just hard to say if that's ever going to be something that benefits you. And we've certainly found in the past year that people timing the market and waiting for the right rate has not benefited them at all.
Thanks so much for clearing that up. And I just think about so many people who couldn't even get pre-approved earlier this year just because they couldn't get pre-approved for what they wanted because the prices were so high. But like you're saying, there's definitely more chance of individuals being able to get the yes, right, that they're looking for. But again, thank you so much for your time. Before we end the video, where can people find you? Are you on social media? What platforms can they reach you at?
Yeah, thank you. So I'm pretty active on Instagram. So the handle is just Louise Mason Mortgages, and Facebook as well. And my website is louisemasonmortgages.com. There's a button right on my website where you can go and just fill in the application for pre-approval. And we'll usually have an answer for you within 48 hours of you filling out the application on what you're likely to qualify for and what the next steps are for you. So, and you can go on there and see the latest rates that we have as well. But I'm always, available for a consultation and just to hear people's scenarios and give my opinion and just to help out wherever I can. So.
Awesome. Thank you so much. So guys, you've heard it. You can check out Louise. Her link again is in the description. If you're looking for a pre-approval, anything mortgage related, feel free to reach out and she'll be more than happy to assist. Again, we're here to make real estate your reality. See you on the next one.